Hello fellow traders, one more episode of the series. Thank you very much for your support and your messages. Today we will analyze the Awesome Oscillator, acceleration, deceleration, technical indicator. It's another oscillator. In this example, we will analyze both pros and cons. Please keep in mind that it is just another lagging indicator. I have already give explanations if you want to check my other videos. I strongly recommend before seeing this video, give a look at my moving average video, because I give all the explanations and all the details that you might need. Again, if you know how to trade, you are not going to need this video. It's a very simple technique, a very simple strategy, a very simple indicator. It's not so popular. Most people work RSI and MACD just to measure the momentum, but the logic behind is exactly the same. It was introduced by Bill Williams in his book Trading Chaos. I'm really affected from chaos theory. I'm also very affected from him and his theories. Also, we will analyze all the indicators that he introduced. We will analyze many popular. I'm referring to at least the most popular that you can find in all platforms, but also we will check some experimental indicators from some of my subscribers, let's say, that we tend to use. So stay tuned, it will be very interesting. But first we need to cover some basics. Let's see how the formula works. I have used colors because we will use many moving averages. Now, the difference between a fast moving average and a slow moving average, I have already explained these details if you check the moving average video, creates the Awesome Oscillator. Now, extracting a 5-period moving average creates the Accelerator Oscillator. Now, you can all already understand the problem and the issue that we are talking about an oscillator. We are talking again about a lagging indicator. It's good when we are using to measure some momentum in the market, but other than that, unless you combine with another indicator, in the end it is just an indicator. Now let's open our diagrams. I have opened the Luni here. It's just random. I will use the 1 hour graph, the 1 hour period. So it's just random. I have used both of them in my diagrams. The one is the Awesome Oscillator, the one that we already explained, the differences between these two moving averages, and this is finally our Accelerator Oscillator. Now let's see some details and how it works. Let's see some pros and some cons like we do with all the indicators. The reason I have both of them open is because they are highly correlated, and this will help you understand by combining these two indicators, because they look that they are two different things even though they are not. Remember, the first indicator is just a simple two moving averages, the difference, and the other one is this indicator, a minus 5 period. You can check the formula, but I'm just making the clarification, and the reason that I have both of them open is to help you understand that each time that you are using an indicator, and this is another oscillator, it will help you measure the momentum in the market. I have explained many times in many of my videos and in my tutorial related to other indicator, is just a variation of the MACD indicator or the RSI indicator. Again, we are looking for some of the bases, divergence. This will help you identify them in all of these oscillators. Now, check the basic difference. Our Awesome Oscillator wasn't able to detect the divergence at this point as we did with our main indicator, with the accelerator. So in my opinion, this makes this indicator much more accurate if you want to use this expression. I totally disagree with using indicators. I have said that in many of my videos. In my trading, I have already said that I'm not using any indicator from these oscillators because I have studied them so much and I know exactly how to use them, and if I can see or I can identify a trend and I might be able to enter in a trade, probably I will take them in consideration, but just as a signal. And the main reason that I'm saying these details is to help you understand in trading and how you can be creative with your trading strategy. You know, when you will be able also to identify some of these people that playing with the indicators and the values, and you know, they claim that they can beat the market, the 5-step strategy, the 3-step strategy, 99% success, 90% success, and so on and so on. These videos, I mean, he have so many views, but every time in every video there is not even a single real account that we can take and check if this strategy is working. So please keep in mind every time you are watching these people, make sure that you can have a real account, that they are real traders and they didn't just upload the video just for the scam or just requesting money or whatever. Now, as I said before about these two, because I don't want to change subject, this is another tutorial video. The most important thing that we are checking again is divergence, and see how our accelerator, the AC, managed to detect them very easily. The main idea again here, it's very simple. In this histogram, when the bar is green, it means that the prices were higher than before. When the prices are red, it means that the prices, the average prices, because I've already explained you what does this mean, the average prices drops. Now the signal goes very simple. When the prices becomes red and you are above the baseline, it's time to sell. When the prices gets above the baseline, it's time to buy. When you see the red bar, you are exiting the trade. Of course, someone might say or might claim that, okay, why expecting one red bar and not wait 2 red bars or 3 red bars or 4 or whatever? Well, you're already starting to getting the idea of this is just an oscillator. It's not perfect. There is no perfect tool in trading. You don't want to be perfect most of the times. You want to be profitable. You want to be consistently profitable. So pay attention, because I will say that many times and I will keep saying that and I will keep repeating that there is no holy grail. Even if you play with the values of the indicator, even if you extract instead of 5, if you extract the 7, if you extract the 12, if you extract the golden ratio propulsion or a golden ratio number or whatever suits you, but you can try. I can guarantee that in the long term, I have analyzed already the basics, nothing will work. And at the end, we need to find something that it might work with a high risk-reward ratio. This is what we are looking for in trading. We are looking to be profitable. Now, also very important is that we need a system that can generate trades. So for this indicator, this is the negative aspect of this indicator. It will keep giving false signals again and again and again. It will work when the markets are trending. All indicator and all moving averages are working in a trending market. This one, many people claim that can also predict the future in a way that it's an oscillator. So let's say that if the market starts to lose momentum, it gives you the signal that the prices might reverse. And yes, this is right. This is correct. Market has momentum. That's why the market is moving waves. but this doesn't mean that the prices will reverse. Everyone, 9 out of 10 traders, probably 10 out of 10, even in the profitable ones, will have different opinions in strategies and how they work and how they use other indicators. All of them will agree at least in one thing. We need to go with a trend. This is very important. It doesn't matter the indicator that you are using. You might be profitable even with a simple moving average. Don't pay attention so much if it's smooth, if it's weighted on the open high prices, on the low close, on 2 candles, on 3 candles. It's just an indicator. I hope this tutorial helps you understand. I will analyze, as I said, all of the popular indicators that are out there, so you will be able to understand at the end that actually we are looking for the same thing, like the MACD, like the RSI, like the stochastic, and like any other indicator that I have analyzed. We are checking exactly the same thing. The negatives of this indicator, again, as I said, is a lot of false signals and a lot of losing trades if you are willing to follow only this indicator. And this is just to understand the main idea of how this indicator works. Another oscillator that is just measuring the momentum of the market. Again, thank you very much for watching this video. I hope I'll see you in the future, and trade safe.